This is the worst day for altcoins in quite some time. The sell-off across the market has been brutal over the past 24 hours, and in today's video, I want to explain why the crypto market is crashing, look at all the reasons why we are experiencing this downside. I'm also going to discuss what I'm doing during this period. One thing that has me a bit worried about the market right now and how things could potentially pan out over the coming days. And then I also want to talk about what my approach is in terms of DCAing into positions, because there are a few positions which I think are starting to represent some really strong value in the market. I want to get into those coins, and then I'm going to be talking about some of the coins that I would be avoiding right now and waiting on. So hopefully this video gives you a little bit more context as to what is happening, because it's a lot bigger than just crypto. This isn't just, one of these crypto dips based on some sort of crypto thing. There's actually something much, much, much bigger at play here. And it's all to do with DeepSeek, which is a new AI model which launched out of China. And it has a lot of the AI world absolutely shocked. And it's these fears that are affecting the stock market, which has ramifications for crypto. So we do have a lot to dig into today, because it could lead to all sorts of outcomes in the short and the mid to long term. We're going to discuss some of those outcomes today. And of course, I'm going to keep you updated throughout the week as things evolve. We've got FOMC in 2 days' time, which is obviously going to be massive for crypto. We're going to discuss that today. And it's just going to be a turbulent week in general. So this isn't the way I wanted to start off my Monday, waking up and seeing this across the market. Obviously, a lot of the coins I'm holding today are down significantly, and no investor wants to see this. But I do also think there are some opportunities being created that are really, really clear. And I think this video will be valuable for you as well to actually identify some of those opportunities. So I guess the first thing we need to get into is, why is the market dipping? And primarily, I think a lot of this dip is being driven by the launch of DeepSeek R1, which is a new AI model that came out of China, which is rivaling ChatGPT. Not just rivaling, in terms of cost, apparently it's up to 97% cheaper to run. So it's a very, very efficient model. And apparently in terms of functionality, it is actually stronger than OpenAI's modeling. What's interesting here is that there's been reports that this was only funded with around $10 million worth of capital, and was a really small development studio that actually created this, versus OpenAI, which has raised hundreds of millions of dollars and has obviously a massive engineering team behind it. Now, we can't verify that at all. We don't know if the Chinese government has something to do with this and is maybe funding it. We don't know. I'm only going off the reports, but obviously when you hear a smaller studio creating a revolutionary model compared to some of the massive studios with a lot of funding, that's going to definitely raise some eyebrows. Just to give you a summary here on what DeepSeek is, it's a Chinese AI startup that launched a new model which rivals OpenAI's leading models in performance but operates at a significantly lower cost. Released on January 20th, DeepSeek R1 has garnered attention for its efficiency and open source nature. Available under an MIT license, this development has sparked discussions within the tech industry, particularly amongst those concerned with AI's accessibility and the potential shifts in global tech leadership. We actually saw, in terms of downloads on the App Store, DeepSeek actually flipped ChatGPT. So a lot of people are rushing to test out this application. By all reports, it's absolutely amazing, and it definitely is a step forward for AI in terms of the current commercial models that are available. Kabisi Letter here says, let us get this straight. DeepSeek was built in under 2 months for less than $10 million, and now it's number 1 on the App Store. On top of this, it was built with outdated chips and a small team of less than 200 people. Meanwhile, the US is pouring $500 billion into AI. How is the NASDAQ not in trouble here? So these are the questions starting to be asked, which is resulting in a little bit of the jitters surrounding the stock market, specifically tech stocks like Nvidia, which have been really driving the performance of the stock market. So you did see, as a reaction, the US markets are significantly ticking down into US Open, which will be happening around the time of uploading this video. I think I'm going to upload this a few hours beforehand, but at the time of recording this, US markets are going to close significantly in the red. You have the US Tech 100, which is the NASDAQ index, down 3%. In terms of futures, you have the US S&P 500 down 2% in terms of futures and the US 30 down 1%. Obviously, one of the biggest losers on the open is going to be Nvidia, which has also been one of the biggest gainers over the past few months, which has driven markets higher and higher. So it has led to questions about, is the AI bubble bursting? And obviously, if the AI bubble is bursting, that would be quite bad for the stock market. And if we see a drawdown in the stock market, then risk on assets are obviously going to suffer in the short term. And I guess that is one of the reasons why we're seeing such a big drawdown across the crypto market at the moment, because crypto is a leading indicator. Typically, when markets go risk off, crypto knee jerks first. That's why you're seeing Bitcoin come down quite a bit today from 105K to 99K. And of course, altcoins, they're on an even higher risk beta to Bitcoin. So when the stock market goes down, let's say 3%, Bitcoin might go down 10%, Ethereum might go down 15%, a lot of altcoins are going to go down 20 to 30%, which does explain why alts are getting hit a lot harder at the moment. And obviously that's being compounded by the fact that a lot of altcoin investors are exhausted at the moment, and there's kind of a lack of a North Star for the market after Trump's inauguration. Now, this obviously could change in a couple days' time. We're going to speak about that slightly later in today's video with FOMC and heading into February, which is a seasonally better period for cryptocurrency in terms of price performance. But it is clear that the market has the jitters, and that is why we are getting an altcoin sell-off. Later in today's video, I'm going to speak about whether I think this sell-off is a buying opportunity or whether you should wait, because could things potentially get worse? I think that is something a lot of people are wondering right now. Another thing a lot of people are wondering about is what the implications are going to be on not just the stock market, but also the global power of economies. So if you do look at the US stock market, it's selling off at the moment in terms of futures. If you look at the Asian stock market, so the Shanghai Index, Hong Kong 50, even the Australian market, these were actually up. So we saw all of the Asian markets up whilst the US market is down. So there has been a lot of questions about could we potentially see a sell-off in US markets as the market is realizing that AI development isn't just native to the US. It's actually a global phenomenon, and there are powerhouses in China that are capable of cooking these, big models and products which are going to rival the US products. So it's almost like the AI war is going to be one of the focal points of the relative strength of these global economies. And we know that because the world is heading into a more AI-centric economy. People are going to use AI in their daily lives. AI is going to power a lot of businesses. AI is going to run a lot of service businesses. So naturally, whoever has the leg up in AI is going to have the more dominant economy. We're seeing the early signs of this being priced in at the moment. But of course, this is an adaptive thing. When new tech launches in certain countries, when new models come out, that tends to sway how the market views the global economies in terms of AI. Because you can see Arthur Hayes saying here, what if the rise of DeepSeek causes global investors to question US exceptionalism? What if they question whether they're overweight US tech versus the world and why they are overweight US bonds versus the world? So this could be a really interesting thing. Could this lead to the US dollar going down? Because a lot of people, instead of parking their money in US bonds and US stocks, they park them in other economies. That could create an environment where the US markets weaken and then other economies strengthen. All of this is being extrapolated off one model. So I don't think there's any definitive answer to these questions, but it's definitely got people questioning things. It's been a little bit, I think, of a mental reset for the market that, okay, America isn't home to all the innovation in the world. There are other countries capable of producing amazing things. As an AI enthusiast or as a tech head, this actually might be quite exciting. From a crypto application perspective, better models is good, cheaper models is good. I'll discuss that in a minute here because you can accelerate the adoption of these AI applications. But in the short term, it does have a lot of investors freaking out. And the US is still the dominant powerhouse when it comes to driving the crypto market and driving the technology market. So when crypto is so correlated to the NASDAQ, obviously when the NASDAQ sells off, crypto is going to experience a little bit of weakness, and that is what we're seeing. I want to touch on Nvidia for a second, and then we're going to get into what the implications are for crypto specifically. So looking at Nvidia, you can see that it is, in terms of futures, selling off, but looking at the chart right now, it already had a little bit of a sell-off on Friday, but I expect this to continue into Monday and Tuesday. In the short term, I'm bearish on Nvidia. You can see here, it actually came down and is testing this major support level, the support level from the pre-Trump pump that is now being tested in terms of futures. If you do go out back to the weekly chart, you can see that that level is here at the 130 zone. If we do break that zone, that is a momentum shift for Nvidia. If you just look at the money noodle indicator, which is the indicator that I like to use on the high time frames, Nvidia has been really adhering to this. So you saw a bounce off that level once, it came down to retest, then reversed, bounced twice, 3 times. We are now getting a 4th retest. I think this level for Nvidia really needs to hold, because if we do see a breakdown, it could come down to this next level here at $100. Now, obviously, that would be very bearish for tech if Nvidia dropped 30%, but it's on the table right now, and that is one of the things to be a little bit concerned about. Could this sell-off in Nvidia end up extrapolating and getting worse? I guess it just depends on how the market actually digests this news. Does it think that it threatens Nvidia's underlying business model? I mean, it slightly does, because the valuation of Nvidia is underpinned by the cost that AI applications actually cost, right? So if you have high cost solutions, you're going to need a lot more GPUs, and demand for GPUs is going to be higher. So the market now needs to price in, okay, if there's going to be this huge crunching of cost across all these AI models, how is that potentially going to impact the profitability of Nvidia? And that's what is being digested right now, and that's what's resulting in a pullback for Nvidia. Now, Nvidia obviously still has the lead in terms of global GPUs. It's obviously still the number one AI proxy play, and I still think it's going to be around. I don't think this is the death of Nvidia. I don't think you should be extrapolating that based on one model that launches, but it has raised questions, and those questions cause uncertainty, and uncertainty and doubt in the market is what drives fear, and fear is what drives sell-off. So from a technical perspective, look at how Nvidia reacts to the crossover here of the money noodle moving average alongside this horizontal support. If you do see a breakdown, that could lead to a bigger cascade, which eventually I think results in an amazing buying opportunity, right? And definitely probably results in stimulus for the markets. I'm going to touch on that point in a second. However, in the short term, it could get a little bit ugly. Now, I think crypto is an asset class which front runs a little bit. I think a lot of the fear in the market of this potential eventuality results in a bigger crypto sell-off up front. So even if Nvidia kept bleeding, I don't think crypto would just bleed out. I think it would front run in the early days of this occurring and then start to stabilize. But obviously, that's what's causing panic right now, and it's causing jitters in the market. I do have a plan for this, though, in terms of my altcoin holdings. I'll speak about that later in today's video. I even think it's going to create some opportunity on select altcoins, but it is a period in the market where you need to be a little bit wary. I'm also careful of getting too bearish on one headline. Obviously, DeepSeek, flipping ChatGPT is pretty crazy, and we're seeing a lot of articles come out about it, and it's a big development for AI in terms of the lower cost and the improved model. But I don't think it's a reason to completely capitulate in fear, because it's just a singular event. And this event, how the market reacts to it's, I think, going to tell us a lot about the efficacy of the claims that a lot of people are making right now. At the end of the day, the price action of a market tells you really all you need to know. So now let's get into what the implications are for crypto. We've kind of spoken about some implications for Nvidia and the stock market and how it's reacting, but let's get into the implications for crypto. Then I'm going to get into how it actually affects crypto AI. Then I'm going to get into my buy the dip plan, how I'm actually approaching that. And then I'm going to talk about some of the major cryptocurrencies in the market. So going to be an alpha-packed video for you guys, and I think a really needed one, because a lot of people are freaking out right now. I think there's elements of worry which are totally justified, but then there are other things which I think are totally unjustified. And I think some people are missing the bigger context here and how it actually affects crypto. So let's actually dive into that now. Talking about the implications for Bitcoin, as I mentioned, Bitcoin is reacting to this sell-off and is one of the assets that is selling off a little bit stronger because it is a beta. I mean, longer term, this shouldn't affect Bitcoin at all. I think Bitcoin as a hard asset has a very important place in the global economy. I think with everything that is on Bitcoin's side right now, potential sovereign adoption of Bitcoin, the potential Bitcoin strategic reserve, all the hype behind Bitcoin with the ETF, Trump coming in, I think there's too much in terms of tailwinds for Bitcoin to be like bearish right now. One thing I'm just wary of in terms of price action is just looking at how Bitcoin reacts in the market structurally. So you can see here, we are having a retest now of this 100K support level. If we do break down and come back into this range, the range that we started to formulate on the 20th of November, I think we could potentially chop in this range for a little while. That's something that Paradise spoke about on the video that I did on Friday. The low of the range is 93K. So if we do close below on the daily and break the money noodle here, 93K is a genuine possibility. I'm not going to feed you pure hopium, just based on the charts, and we can only go off the charts. 93K, if we close back into the range, is in play. However, we haven't closed back into the range yet. The bulls are still fighting to keep Bitcoin intact here. I think the reaction for Bitcoin, a lot of it will depend on FOMC, which we'll speak about later, and whether we actually see Powell come out super hawkish, or whether he softens the market a little bit because of what's happening in terms of prices. But Bitcoin is going to be extremely sensitive to that. The other thing I want to point out is that the de-risking prior to an FOMC is a very common phenomenon for Bitcoin. We pretty much see it every FOMC, especially when there's a major focus on macro. And usually when there's a major focus on macro, it's because there's an absence of other North Stars for the market. So all the FOMCs, whilst Trump, once it was announced that Trump won the election, the market didn't really care. None of the macro data the market really cared about because it was a Trump pump. So it went up and up and up because the market had a North Star, and that's Trump's inauguration. Now that that's behind us and people are looking forward to what's next, is it a strategic Bitcoin reserve? Is it crazy money printing? What is going to be the next catalyst? The market is now paying a lot more attention to macro as a North Star. Remember, markets hate uncertainty. They always want to look for a North Star. They always want to be guided by something. And because of that, relative to what other events are available, the market will fixate on an event. And I feel like in this instance, the event that the market is fixating on is FOMC. And because it's so heightened, due to the fact that there's a blackout period in February and the next one isn't until mid to late March, the relative importance of this has increased. And for that reason, any sell-off that happens pre-FOMC is probably going to be greater because the market is trying to pre-plan the risk. I actually think based on price action, the market is almost reacting like it's going to be bad. It's preempting this. So even if Powell is hawkish and we get a bad FOMC, a market's going to keep going down after that. There's a genuine case that we see a reversal because it's already priced into the market. But that's something I'll touch on a little bit more later in my Buy the Dip section of the video. But definitely FOMC is another thing that's at play here, which is, I guess, accelerating the drawdown. If we didn't have FOMC and the market still had a North Star like Trump, I don't think this whole DeepSeek thing would be as bad for crypto. But I think because the market's already jittery, because we've run up so much, people are kind of trying to pre-de-risk to just avoid getting completely wrecked. Although it is an awkward spot for a lot of altcoin holders to actually de-risk because a lot of the high time frame invalidations, they hit earlier in the month. So to be de-risking now, it's kind of a risky game, but I totally understand why Bitcoin holders may do it because relative to altcoins, Bitcoin hasn't dropped as much. So there still is a window to potentially de-risk on Bitcoin. But going back into the actual implications of this whole DeepSeek launch on crypto itself, I want to read out this tweet from Game for One because I think it's an amazing tweet which really summarizes the implications. He says, "I've often seen NVIDIA as the barometer for the AI bubble. DeepSeek proves why. NVIDIA's dominance has relied on startups paying premiums for OpenAI's APIs and splurging on GPUs like the H100. Because it's so expensive, demand for GPUs increased significantly. But R1 flips the script, an O1 level model on par with GPT-4, free open source and 30x cheaper to run. On Friday, NVIDIA shares dropped as the market began to digest the implications. Whether this was an overreaction will become clear as markets open, but typically markets overreact, so we might see a bounce at open. I think this was a few hours ago. I don't think we're going to see a major bounce at open. Nvidia keeps dropping in terms of futures. Here's the TLDR on R1 and why it matters. Backed by Chinese quant fund high flyer, DeepSeek trained R1 on a scale that would usually require cutting-edge hardware, but they achieved this by optimizing their training process for efficiency. This turned what could have been a limitation into an advantage. The result, a model that matches or outperforms ChatGPT in areas like math and coding while being dramatically cheaper to run. Built on an innovative hybrid architecture of chain of thought process, R1 isn't just another clone of US developed AI, it's a genuine leap forward. Will this dent Nvidia's growth? Startups play a crucial role in Nvidia's dominance. They're key drivers of demand. Startups not only use APIs from giants like OpenAI, Anthropic, and Grok, but many also purchase GPUs directly to train their own models. This double-layered demand has been a cornerstone of Nvidia's growth. If startups begin to follow DeepSeek's efficiency-focused playbook, relying on less expensive top-tier GPUs, it could reduce demand for Nvidia's most profitable products. This is a very, very good point, basically saying that if other companies start trying to become more efficient to compete with DeepSeek, how does this affect Nvidia? Because maybe there'll be less demand for GPUs. But the second order effects go even deeper. If demand for high-end GPUs decline, Nvidia might face pressure to lower prices, which could ripple across the entire AI ecosystem. Lower GPU prices could lower barriers to entry for smaller players, accelerating innovation but also intensifying competition. The shift from brute force spending on hardware to more efficient processes could fundamentally change how AI products are built, monetized, and scale. This is really bullish, by the way, for AI. Cheap AI is good. This benefits the AI crypto sector. We're going to touch on that in a minute because cheaper models allow you to democratize access for AI. It's a huge boon for decentralized AI, but it's bad for more centralized business models like Nvidia, which rely on higher prices. So there could be a scenario here where it's bad for Nvidia, but it's actually quite good for AI development in general. And that's why I don't think, apart from this de-risking sell-off that we're seeing, the crypto AI industry will be negatively affected. In fact, I think it will be positively affected. And I think it reaffirms some of the core values that I really believe in when it comes to, crypto AI, accessibility, democratization of AI. The security factor is going to become a major thing. Who actually controls AI? I think all of this is being highlighted by DeepSeek and is probably in the favor of crypto AI, but, not great for Nvidia, which is one of the stocks which is, I guess, kept the overall stock market index afloat, or potentially buoyed prices maybe slightly artificially just due to how much it outperformed and how large of a weighting it actually took of these indexes. I'll just read this last bit here and then I'll get on with that point. For Nvidia, the challenge isn't just about losing revenue from startups, it's about losing its position as the default enabler of AI's future. The market appears to be front-running this possibility, with Nvidia's price drops reflecting fears that R1s could impact spread. But is the reaction overdone? Businesses still prioritize results, and R1's lower cost of experimentation could make it a commercial magnet. Nvidia's growth now hinges on how startups balance price versus performance, but the scale and speed of this shift remain uncertain. How will US players respond? OpenAI has delayed O3 reportedly due to concerns over its disruptive potential, but competition like this could force those timelines to accelerate. This will definitely happen, by the way. I think it's going to cause a bit of AI panic in the US, and we're probably going to see Trump come out and speak even more about AI in the US as a knee-jerk reaction to the R1 model. If open source innovation like R1 becomes the standard, what happens to the moat that US-based AI leaders like OpenAI, Anthropic, and Google have relied on? The second-order effect here is clear. US players will face pressure to innovate faster, even at risk of destabilizing existing ecosystems. Trump's push to make AI a key campaign pillar adds urgency. Expect the US to double down, but will this lead to rushed releases or policy changes that will inadvertently create new vulnerabilities? The bigger picture: DeepSeek R1 isn't just a warning shot, it's proof that the AI landscape is shifting in real time. The market may be front-running these changes, but the full impact on Nvidia, the AI ecosystem, and US players will take time to materialize. How this plays out depends on whether key players can navigate the new dynamics or falter under the pressure of accelerating innovation. Game for One also adds some thoughts on crypto AI coins, which we'll get into slightly later. But I wanted to point out Rand's thread first, because this is also a good one in terms of the potential implications, before I get into how I think it's a good thing for crypto AI and then how I'm actually approaching the market overall. I want to reiterate, this is kind of a complex thing that we're grappling with, because we're basically seeing increased competition in AI, lower cost in AI. It's a very interesting scenario because it genuinely has positive implications for some areas of crypto, but negative maybe implications on stocks like Nvidia, which have kind of pushed the stock market up. So it's going to be interesting to see how markets react, because if the AI market realizes that it actually might be a good thing, we could see a lot of those projects perform really well. But if Nvidia continues to drag the index down, could crypto just kind of act as a beta to risk and keep faltering or going sideways? It's a genuinely interesting proposition, and one we'll discuss a little bit more later. Rand thinks things could get worse. I agree with him to an extent, but with some nuance I'll get to after I read out his thread. He says, a lot of people on my timeline believe DeepSeek could be confined to traditional markets. They're wrong. Let me break it down for you. So he basically talked about the impact, which I just discussed, on the NASDAQ and what DeepSeek actually is. But talking about the implications on crypto specifically, Rand says, how will it actually spread to crypto? The largest wealth creator in the last 24 months has been the tech market and AI stocks. They've created trillions of dollars in paper wealth. This wealth has allowed people to move higher up the risk curve and into crypto. If these stocks take a hit, people will lose fortunes, and this could crash all risk markets as people scramble out of risk. Make no mistake, this could be a black swan. It's completely unexpected and caught everyone by surprise. The magnitude is also huge. So what happens next? The market needs to properly evaluate this tech and the implications. It also could be trickery by the Chinese, as we know they're so good at it. If it is a black swan, it may be the reason governments are eventually forced to print money again. This point is very important because there's kind of two scenarios here. Either the market actually rebounds because it realizes that it doesn't care and it's kind of, nothing burger, and it spooks us for a couple of days and then, we respond post FOMC. That's one scenario. The other scenario is it's a black swan. This means we get a much more severe price correction in the short to midterm, but governments actually step in with stimulus to save markets, and potentially the reaction to the interest rate decisions also change to avoid further capitulation in markets, and then markets really rally later because they had obviously a huge crash, and then the government comes in and intervenes, and then you see, or the Fed intervenes, and then you see a big spike afterwards, which creates a big rally. So I think both scenarios will lead to a rally, funnily enough, but it just depends which one the market takes. Does it take the short-term bounce and kind of shrugs it off, and then things continue? Hopefully we just have a normal, green February, or do things get a lot worse in the short term, and then we see a bigger rally later on? That's a good question. Obviously, crypto is really driven by global liquidity. It's really driven by money printing, quantitative easing. We've already seen the markets perform badly under quantitative tightening, so it's going to be interesting to see how this actually plays out. Rand says, either way, I expect it to get worse before it gets better. Obviously, the time frame here is up for question. I also think it will get worse, but get worse in terms of what? Over the next 2 days, pre-FOMC, probably. Does it continue to get worse after that? I guess that's the question, and no one knows for sure. I do have a plan, which I'll discuss today, irrespective of how bad things get. I've got a plan with my personal portfolio, but one point that he makes here that I totally agree with is make sure you're holding quality. This is a potential repricing event and is great for economies in the long term, and I would agree. I think it's great for economies in the long term in terms of its potential to actually generate excess liquidity, money printing, and also its potential to make AI more efficient. And longer term, AI becoming more efficient and less intensive is actually great for productivity overall. So ironically, longer term, it could be very good for the US because it can become a much more productive economy with cheaper AI models. So it's like a short-term versus long-term trade-off here that actually could be quite good for markets longer term. So there are two discussions I want to have now. The first thing, could this actually be good for crypto AI? What are the implications? And then, should you be buying the dip? Should you be panic selling altcoins? And what my actual market strategy is right now. So on the first question, could this be a good thing for crypto AI? I actually think it is. Let's say the AI market actually does experience a sell-off. Could we see a rotation back into crypto? Because a lot of crypto capital that normally would go into Web3. So a lot of liquidity, instead of going into Web3, has gone into AI stocks and it's gone into AI risk assets because the market views that as higher upside and more disruptive. If that bubble in the shorter term is popping a little bit, could some of that liquidity flow into crypto? I don't think it would happen straight away. I think it would take months for the market to feel comfortable going into another risk asset, but it does free up a lot of liquidity. If the overall AI market diminishes a little bit, could we see people actually go into an asset like Bitcoin, viewing it as slightly more defensive? And could that potentially increase sentiment for altcoins off the back of more inflows to Bitcoin? It's kind of an interesting discussion to have. And in terms of the actual implications on the crypto AI sector itself, as Mark points out here, DeepSeek is actually extremely bullish for crypto AI. An open source model with better performance, and they did it with inferior hardware. All major crypto AI frameworks can easily use open source models. This is a very important point. I've been speaking to projects today. Many of these AI agents, they're already moving to DeepSeek, or they're integrating the model into their existing framework. So these applications become more efficient and become better. Even personally, I've been experimenting with my developers on how we can integrate it into the business, because better models mean more efficient businesses, my business, other AI companies, and they can actually utilize this because it's open source. Now, if it was private and, really kept under the hood, this could actually be a bearish thing, but because it's open source and anyone can use it, markets, I think, will realize eventually that it makes crypto AI stronger. Due to natural stock crypto liquidity flows, we're seeing corrections for crypto AI, but make no mistake, even US companies will take learnings from this as their code is fully open source. This will accelerate the path towards AGI, 100%, which means AI development could actually accelerate. But if these companies do end up going down that path of these lower cost, more efficient models, obviously that would impact demand for GPUs. So NVIDIA might suffer, but the overall AI landscape might actually improve. And Jazz also comments on this by saying, DeepSeek just accelerated all timelines. We were settling into the fact that this stuff was going to cost hundreds of billions to build, that it was all going to be closed sourced, monopolized, and then DeepSeek outperformed all leading models at a fraction of the cost. They open sourced the tech. Now any AI builder has access to the most powerful model. Why is no one talking about how we'll see much better agents? The fat up thesis just got more real. This is also true. Improved technology means better agent applications. That means crypto AI agents, and I actually think Web3 is the perfect framework for these agents. It's going to become a lot more efficient, a lot faster. Trading on chain is going to be better. The crypto experience is going to be better. The number one reason why more people haven't been onboarded to crypto with all its benefits is just that the UX hasn't been good enough. The experience is too hard. With better agent technology, more people are going to be onboarded into crypto. So longer term, it's actually an extremely bullish thing for the AI agent sector, and also crypto in general, because we'll see more people onboarded into crypto. So it really becomes a short-term versus a long-term discussion. Yes, there's short-term pain, and even in the crypto applications, which are going to benefit from this, they're in pain right now in terms of price, but that actually will create massive opportunity. How you buy the dip obviously will impact how you benefit from this in terms of execution, but we'll discuss that in a minute. Longer term, though, I think this is actually quite bullish for the crypto AI space. Game for One points out that one of the issues with the crypto agent space in recent times has been the fact that in over a month we haven't seen many new developments, and attention drives liquidity. But we could potentially see a lot of new developments now with a lot of these protocols integrating DeepSeek. If you are a protocol, by the way, integrate DeepSeek. You'll probably get free marketing off it, and you'll probably be able to improve your efficiency and lower your cost, which is going to create better revenue models. Like, actually think about it. If these companies, these crypto AI companies or projects, can now spend less and get more outcomes over time, they're going to become more profitable. These business models improve, so the token should have more value longer term, not less value. That's a little bit of food for thought. As I say here, many crypto projects will benefit from the launch of new and improved models, as well as the end result, which is lower cost. Decentralized solutions benefit from all AI improvement, and lower costs will help crypto AI scale and, of course, bring in more users into Web3. And the final point I want to make here before the Buy the Dip segment is the best thing about investing in AI is the fact that in terms of mindshare, it never goes away. Every time there's a new development, a new application, everyone's talking about AI again. What's happening today? Everyone's talking about AI. The news will be talking about it. Everyone on X is talking about it. Everyone on YouTube is going to be talking about AI. So it's a constant, there's constant attention flow. It's unlike any other sector really, because it never goes away. And that's why I think AI crypto as a vertical is never going away. It's an attention economy, and AI always remains the center of attention, which is one of the fundamental underpinnings in my belief in the AI crypto sector, as well as its potential, specifically agents to actually revolutionize how we interact on chain. But now to go to a more fundamental question, is all of this going to justify in the short term buying the dip? Is this a good opportunity to buy AI crypto alts? What do you do with other alts as well that are suffering? They might not benefit as AI coins, but they're suffering off the back of the stock market sell-off. One factor that I want to point out here is FOMC. Now, I know that the Fed and Trump are supposed to be separated. It's supposed to be an independent body, but Trump has obviously come out and lobbied for lower interest rates, and he's been very clear. He actually said that Jerome was going to listen to him. I'm interested to see if the markets keep selling off over the next couple of days, which they probably will in terms of stocks, right, into FOMC. Is Jerome Powell going to put the knife in the back of Trump here and tank markets even further by being super hawkish? Or is he going to subconsciously soften a little bit to try and protect markets that are already going to be experiencing a little bit of negativity around what's happening with NVIDIA? It's an interesting question. If I had to predict, I think we could get a surprise at FOMC, a positive one, because a lot of people are already assuming the worst, and that's why we're seeing such a big sell-off. And if you actually look at other FOMCs, and CPI as well, the biggest sell-offs happen often before FOMC. So I've got this feeling that we could see a local bottom during FOMC. Remember, fear and uncertainty drive markets. So what if this is peak fear in stocks? That leads into tomorrow. It's a day before FOMC. People keep de-risking, right? We see the capitulation getting worse. As Rand said, things could get worse. I also agree. But what if FOMC actually marks the local bottom? And after that, once it's out of the way, we know there is a blackout period for February. And then we don't have another meeting until the 19th of March. So as long as there's no crazy surprises, even if he is hawkish, but in line with that market expectation, obviously rates don't get changed, which is the expectation from the market, we actually see a bounce because it already de-risked massively prior to the event. That is something that's definitely at the front of my mind right now, and probably makes this, in my opinion, a decent DCA opportunity. So let's get into that now. I think over the next 2 days, there are some great opportunities to scoop up certain altcoins. I'm going to get into them now. Not every altcoin, not every random coin that doesn't have a strong narrative, but select AI stuff and select alts with really strong catalysts. I think are good DCAs over the next couple of days. Now, obviously, the bearishness could extend for a few weeks, and you could get even better opportunities. That's why you don't go in all at once. But I'm taking this personally as an opportunity to start laddering in over a TWAP over the next couple of days, and then I'm going to keep some stables for potential continued capitulation. So think about it this way. Let's say you have $10,000 to spend, right, on a dip buy. $5,000 I'm spending over the next 2 days on quality assets, which I'll get into, on a TWAP. So that's just a time-weighted average price DCA over a 2-day period. Then I'm going to wait and see what happens with FOMC. And then I'm going to make my decision on the next 50% later of that $10,000. And obviously, that $10,000 might be from my $50,000 worth of stables in this example. So if I'm 32% stables right now, I might go down to 25%, but I'm not trying to go to 0%. And that is true, by the way. I'm sitting around actually 36 now because my alts went down, and then my relative stable balance was 32. Now it's 36, but I might go down to 27 in 2 parts, maybe even 25, half of it over the next 2 days, and then half of it depending on if things get a lot worse. Because I do want to keep some stables if, like what Rand's saying is true, and we get continued capitulation and NVIDIA just sells off more and more, then I do want some buy powder to be able to scoop things in at much lower prices. But at the same time, pre-FOMC sell-offs often do equal max fear, and that is being combined with a lot of fear in the macro market right now with what's happening with NVIDIA and DeepSeek. So for me, that's a buy the dip opportunity. And if you guys have been watching the shows, you'll know the last time I majorly bought the dip was in December, during that major December sell-off. Since then, and if you've been in my Discord and watched the Streaming Paradise on Friday, you'll know that I'm not adding significantly to new positions. I might trade something here and there. I might rebalance things, so buy something, sell something else. But my stables have been around 30 to 35% since that December dip, which I actually bought. And then on the bounce, I took some more stables off the table and topped up my dry powder balance. But I haven't made a big purchase in a month. That changes today because I am a real proponent of buying fear in the market. You don't always time the bottom, but generally speaking, and this markets do the opposite. So right now you're probably thinking, oh, I want to de-risk. Things are going to get worse. My brain does the opposite. I want to de-risk when things are pumping. So if there are positions I want to exit, I'll sell them on a pump. But I actually am interested in being opportunistic. And when there's fear, that's when I want to be buying. But the market seems to get this twisted. People want to do the exact opposite. They want to sell when things are bad and they want to buy when things are good. And a lot of you might be freaking out right now, but this is actually the opportunity to buy. And I'm not saying this is the peak or bottom, but these periods of fear are the periods to be averaging into the market. And then when things are really euphoric, that's when you should be taking profits and selling. Not the other way around. But for some reason, retail, most people get this the other way around. And that's why most people don't make money in crypto, because they don't buy fear and sell pumps. They buy pumps and they sell fear, which makes no sense. And I'm going to answer a question now based off the back of that. Like, Mars, is it too late to de-risk now? On a lot of coins, yeah. Like, invalidations should be based on technical parameters. So if a coin is breaking down from a high time frame level, I'm looking at BitTensor now. If it breaks down this level, right, and you get a bearish retest, that is your invalidation. You don't want to be selling into a major support. If it was here right now, like, oh, should I de-risk here? It's like, well, your de-risk window was back here on the initial breakdown. So I think it just highlights a very key point, which I want to drill into your heads, that whenever you buy a coin, you should always have a technical invalidation as well as a fundamental invalidation. So I don't think it's good enough in this environment, which is really choppy, just to hold a bunch of alts with no invalidation on any of them. You should always have invalidation, at least partial, meaning like, okay, I like this altcoin, so I'm always going to hold half, but half of it I'm willing to cut if it breaks down this level, because for me, that's a technical sign of weakness. And then you probably would have saved yourself a few days ago as a lot of stuff started breaking structure from actually having no stables, and now you would have money to buy the dip. Now, I know you might say, oh, Mars, is obvious in hindsight. I've been talking about this for a long time, but this will also apply in the future. This is likely going to happen again and again and again and again and again. So next time, just remember this. I don't think the altcoin cycle is over. It's become more difficult. That's 100% for sure. But we are still going to see rallies at some point. So next time, actually take profits on those rallies. And when things break down, have invalidations for those breakdowns. Now, into the buy the dip list. Once again, as I said, I'm doing half over the next couple of days, and then I'm waiting for the other half based on what does play out with the FOMC. If I don't get that other half in, I don't necessarily care, but I do want protection against even more downside, which is why I won't go all in with my desired amount of stables now. But this is basically my list that I created. I posted this in the Discord this morning. That's where I post all this stuff first. But this is my accumulation list. Solana, Jupiter, Pepe, ENA, Link, Hype. These are my safer plays. Now, obviously, the ETH betas like Pepe and ENA went down a lot today, but coins like Link, Hype, Sol, I'll get into Jupiter in a second and why I think it's a really good DCA. These are assets that I think are going to come back. As Rand said, quality assets are what you should be focusing on now. I 100% agree. These are all quality assets in my opinion. You can make the argument against Pepe, but I still want one meme, and that's why I put it in this safer play portfolio. I still think as an Ethereum beta play, when ETH comes back, Pepe as the leading meme will do well. But I understand if you don't want to DCA into it today. I'm not either. But it is on that list for a reason. Then the AI stuff, I think, represents some really interesting opportunity because ironically, it's the sector, even though it's drawing down a lot, that benefits the most from all of this. Virtual's business model doesn't get weaker with better models coming out. It gets better. They can create better agents. It only improves. They make more. These applications make more money. Anon, for example, it does better. It's an abstraction layer to power AI agents. If AI agents are better, more people will use them and the network will get more usage. So it's actually better. LMT, I don't know if you guys know, as a product, it's basically an agent that sits on your desktop. With improved models, that gets better. It's going to have more functionality. It's going to be faster. All these things actually get better. Mode as well. They are a pick and shovel play. So they basically have AI agents that are launching on their platform. The more agents get better, the cheaper they become, the more people utilize them because they're cheaper and there are just better models available now, the more agents that are actually going to be transacted with. So it's longer term a big beneficiary, and that's why in terms of a sector that I'm DCAing into, AI is still one that I would have the heaviest on my DCA list. Now, personally, I would start with the majors. So I'm just going to talk about now what I'm personally doing. Let me give you a caveat though. There are some assets I don't need to accumulate right now, which are on my buy the dip list. I really like, obviously, you guys know some of the RWA coins, Chintai, we're even seeing Ondo and OM drawdown. Like there are assets which I like there, but I feel like I have enough exposure to RWA. So I'm going to talk about now the assets that I'm underexposed to that I'm adding. But of course, there are coins which I'm bullish on, but I just don't feel like I need to add anymore. I'm using this as an opportunity to buy stuff to fix the weighting of my portfolio. So virtuals, for example. I never got an entry on virtuals during the last run. This is the first time I'm getting a high time frame entry. So now I can actually take a virtuals position and feel confident. I'm buying it at $1 billion instead of $7 billion. How much better is that in terms of FDV? Actually, it's a little higher. It's a couple billion in terms of FDV, but I'm getting in at what versus the peak? A 65% drawdown, and they just deployed on Solana. So arguably, as a business model, they've become stronger. Now, obviously, less people are deploying agents, so they're making less money, and that's priced in. But longer term, I think launching on Sol is a good move from virtual. So I'm adding this for the first time, and I have invalidation. So what I like about this as a play, and it's the same for a couple of others I'm going to speak about, like Tau, it's got a clear invalidation. So if I'm wrong here, I've actually got a level where I can actually de-risk. But for me, that'll be partial inval. So I'll keep some longer term, and then I'll keep some that I'm willing to, invalidate if it keeps going down. But for me, these are TWAPs, so tokens I'm averaging into. The other one that I'm absolutely averaging into that I missed, and I'm so happy I'm getting a dip on, is Jupiter, because they announced, I think yesterday, that they're going to be putting 50% of protocol fees back into buybacks, right? Now, look at when it was announced. Here, look at what happened when it was announced. It went up 38%, but it's crashed back down to pre-announcement. Why? Because they announced on the worst day ever. Jupiter team, obviously you didn't know this whole DeepSeek thing was going to happen, but you picked a terrible day to have your most bullish announcement ever. In a bull market, if Bitcoin went not from 105 to 100, but from 105 to 110, this is trading at $2 right now. Instead, it's at 97 cents. So for me, it's a great opportunity to accumulate because I don't have much exposure to Jupiter, but now I can get exposure. And if the market runs and recovers, this is recovering at one of the fastest, in my opinion. So as a dip buy, I'm also looking for assets, not that will just recover, but stuff that recovers the fastest. Anon as well is one of the only tokens that's actually green today. Toshi as well. So you can even see just looking through your trading view, like what tokens are green. Like I think Anon will bounce quite strongly because it's already showing that it has a lot of buyers stepping into bid. A couple other alts are also showing that, which we'll discuss. But yeah, I think Jupiter here is a good play and is one that I'm DCAing into. So Virtual's Jupiter, they're two that I'm adding. Another one's Tau, because it is at the bottom of the money noodle as well as a key horizontal level. I like Tau as a play longer term. This is a slower burn. It's less upside, but I wanted to add more Tau, and I think Tau will come back at some point. Anon is another one that I'm adding. I am increasing my position actually in this one. Now, from a technical perspective, it's not as good as Virtual and Jupiter because we are seeing price push back up here. So could it get rejected here and then end up going lower? Potentially. I think the response has actually been quite good. Seeing a lot of buyers step in. A lot of other tokens look like this right now. We are seeing signs of a reversal. So if you really want to play the technicals, you could wait for a flip, a retest, a higher low, and then potentially a range high retest again. If you're playing the technicals, for me, this is just a longer term DCA. So always decide before you buy a coin, is this a long-term DCA? Am I happy to be underwater? If that's the answer, then go ahead, DCA. If you're not happy for that and you need it to be a trade, then treat it like a trade and go off the technicals. Totally depends on how you want to approach it, but it's got the M McDonald's pattern. The chart doesn't look great, but fundamentally, it's a huge beneficiary. of lower cost models. So that's one. And you can look at other AI stuff as well, like LMT. Fundamentally, this is a really strong product. Now, this is still a few months away as a product, but I like this, and it is down massively off highs. Could it go lower? Yeah, it could go. I originally called it at 75, 60 to 75. Could it go back down there? Of course, especially if the scenario that I discussed happens where FOMC is not great and then the market continues to falter. But if you want to DCA, now's an opportunity. Now, I'm not personally DCAing this one because I have enough exposure already. I bought pretty heavy twice, but if you don't have exposure, this is an opportunity to potentially gain exposure to it. Look, this is a full list that I'm looking at right now, but of course there are others, like Fartcoin, for example. I'm not buying yet, but this is one that if you didn't have exposure to, I think it'll come back at some point. And obviously, RWA assets, if you didn't have exposure, now you can consider getting exposure. This is a chance for you to add stuff that you missed, and you're now getting it at discounts. Like, you probably wanted to FOMO into Virtual a month ago. You probably wanted to FOMO into Jupiter yesterday. You probably wanted to FOMO into Anon when it was $24. You probably wanted to FOMO into a lot of these coins, right? Now you're getting chances to buy them lower. Nothing's fundamentally changed on a lot of them. Obviously, it's just the broader market which is taking a hit. It's a good reminder that having technical invalidations during times like this can save you. So if you are interested in those resources, we have a lot of them in the Discord. In Paradise's resource section, he has all of these things: entry triggers, exit triggers, risk management, trade management, how to set stop losses, leverage and liquidations. These are either videos or documents that he's created. And we're even aggregating all of this into a brand new custom course. We're going to be rolling out the first modules tomorrow, where Paradise goes through accumulation uptrends, distribution downtrends, using leverage, scanning trades, strength, how to use the money noodle, all that stuff. And if you can combine those technicals with fundamentals, I'll give you the fundamentals in the show, you get the technicals in the Discord, and on the show when Paradise comes on. I mean, that's a killer recipe for success. I think this period of the market, you need to be paying a lot more attention to price action than during other periods of the market, that's for sure. So if you're already in the Miles High Club, you'll get access to this tomorrow. If not, you still have time to join using the link in the description. You will get access to all of this. I honestly think it's worth the admission fee to make sure you don't get wrecked, because the cost of getting wrecked by bag holding stuff can be thousands, tens of thousands, hundreds of thousands, depending on how much you're investing, versus, what the Discord actually costs. I think it's a no-brainer. But those resources will be there for everyone that is in the group. And just to finalize my thoughts here, as I said, I'm DCAing into quality assets. I am kind of doing a 50-50 approach, TWAP over the next couple of days because I think it's a good opportunity, and then saving some stables for in case things get worse, because you never know how the market's going to react. It's pretty unprecedented times right now. The whole AI market has never happened before. There's not much history we can go off. I am personally not freaking out. I know some of you might be panicking seeing your portfolio go down. It's not great. I looked at my portfolio this morning. A lot of my longer term holds are down. It sucks. But it's just part of the market. The market is reflexive to both sides, especially if you're holding illiquid altcoins. Like, illiquidity means that when the market goes down, you get hurt a lot more, but when the market goes up, you make a lot more. So if you're in illiquid alts, like, you got to accept that that's part of the game. That reflexive upside is also equally as reflexive to the downside. So I guess one of the reasons I'm not panicking today is because I've accepted with all my more illiquid alts, that is a possibility. And even with the safer alts that are more liquid that I hold, like, Solana, ENA, Link Hype that are down, these are assets that I still think come back. They're quality assets. I have a lot of conviction in them. So I actually think this could be a good opportunity to DCA. I'm pretty happy with the size of my Hype bag and my Link bag, but if you don't own those assets and you want to add them, now they're getting big discounts where it could be an opportunity to accumulate. So don't panic. If you do need to step away from the computer today, take a break. I know a lot of my trader friends, they just take a break today. They've set their limit orders on alts, so they'll get their orders filled on their exchanges, and they're going away. They're chilling for the day. They're going to come back tomorrow or the day after. If you're really emotional and the market's affecting you right now, honestly, that's the best thing to do. Even myself this afternoon, obviously I'm in the Discord and I made this video and I've been tweeting, but I'm going to probably step away for a little bit tonight. Just, reset, evaluate things, because volatile markets don't really lead to great investment decisions. I've set my TWAP orders, so they're automatically executing. I've set my limit orders in case things get worse and I get a chance to bid some high time frame levels on certain alts, and then I'm probably going to chill for the rest of the day after that. So hopefully you did enjoy this video and it gave you a bit more context as to what's happening. Obviously, I'll be here tomorrow and the day after because things are going to probably continue to be crazy with FOMC and as the market starts to digest some of this stuff. So I'll see you later. Hopefully you have a nice rest of your day. I know it's not an easy day in the market, but just put your helmet on. We're at war during days like this, and either you face it and you benefit from it, or you falter. And I don't like faltering on days like this because I know it's where opportunity is created in the market. So I'll see you in the next one. See you later. Peace out.